Let's quickly move on. I think we have another management in focus.
Well,
Rallis
that's
India.
right. Rallis, that's the one on our radar. It was a challenging quarter 3 for them. The company did report some kind of weakness, both in pricing exports as well. They saw a degrowth in revenue due to a significant fall, in fact, in exports. My colleague Vamakshi caught up with the MD and CEO, Mr. Shukla, from the sidelines of the Kotak Chasing Growth conference and began by asking the reasons behind the slowdown. Let's listen in.
When you look at Rallis, I think it is very important to understand Rallis operates in multiple segments. One of our businesses is domestic and then export. On domestic, we have crop protection business, we have biological business as well as seeds business. So when you look at performance of biologicals and seed business, I think they have done very well. Even on crop protection side, domestic business has done very well. On volumes, we are up. Obviously, industry is going through a very difficult phase where prices remain subdued. As a result, performance may not exactly be what it looks like in the number. Our biggest challenge has been export market, where global commodity prices are low. We are also dealing with some of the legacy product where because of the excess demand supply situation, prices and volume both are subdued.
All right, but what is your outlook going forward when it comes to the volumes as well as the pricing? Because even though the domestic business has grown by 2.5%, the pricing over here has still declined. Similar is for the exports business, where we're seeing both a 34% volume decline as well as a 4% price decline. So going ahead, do you think the decline in volumes and the declining in prices will continue, or have prices stabilized now?
So global situation still remains very challenging, where commodity prices are low, farmer earnings are still low. As a result, and we are also stuck with the what you call legacy portfolio. So global business, I think we have seen the bottom. Things should only look better from here. But you have to understand our business. It's a very seasonal business. It is very, very difficult to judge Rallis based on the quarter, because these quarters overlap from Kharif, Rabi to different seasons. What I want to tell that our company is going through a transformation process. We have identified some gaps, and we are trying to work on those. For example, we believe our seed and biologicals portfolio can do better from here. That's a area which is growing. We are focusing a lot on that. Within the crop protection portfolio, we had weakness in the herbicide business. We are fixing on that. I also believe the efforts we are taking on the demand generation side to get more focused on the domestic market should also start giving us volume momentum. Prices, of course, I cannot control, because prices are driven by what happens based on the global demand and supply situation.
Well, so you're saying that volumes, the degrowth that we've seen, that is going to end now, especially on the exports part. Now, from now onwards, if we compare on a quarter-on-quarter basis, it's going to improve. Is that what you're saying?
Well, based on the orders we have and based on the conversation we are having with the customers, looks like while prices continue to remain low, but volume certainly should start picking up.
Sure, that's quite promising. And, briefly, you mentioned about how you're changing, so now you actually had planned a portfolio cleanup as well as a leaner organization structure. So I wanted to ask you, is the churn in the product portfolio, at least, is it largely through? And another question on that front is, when will the benefits of this start flowing through, and how will it exactly impact your own profitability?
So our focus remains to improve profitability. We are in a seasonal business. We get only one chance in a year to sell to the customer. But some of the efforts we are taking in terms of making our organizational structure leaner, trying to pivot more on the customer, leveraging digital, also cleaning up the portfolio. We have recently evaluated and done with the exercise of looking at the tail portfolio. We are certainly going to deal with as we enter into the new season in 2025-26.
And what would the improvement on the profitability be on account of this sort of restructuring?
So it's very difficult for me to give you a short-term projection, but our long-term goal is that on a continuous basis, we should improve our return on capital employed. And it has to come from combination of portfolio mix. So we need to start weeding out low margin portfolio, start adding in more higher margin portfolio. On the cost side also, we are looking at how do we utilize our assets better, at the same time manage some of our costs differently, so that the cost we incur, it is being used for more productive uses, for example, demand generation activities, etc.
All right. So when you're talking about adding more better margin products to your portfolio, you've also mentioned about metalaxyl. So it is, I think, in the final stages of being commercialized. So when will that commercialization take place? And is this a part of the products that you're talking about? And apart from this, what other products are in the pipeline that could probably, help your margin expansion plans as well? And, quantify for us the long-term potential that you see from these newer products that you plan to introduce.
So the way we look at it, our crop protection portfolio, I think we expect our herbicide, for example, herbicide as a part of crop protection contributes lowest in the overall crop protection portfolio. In domestic contribution of that should accelerate. On the seed side, we should actually accelerate our business. I think this business we had bought 12 years ago, it is now showing sign of improvement. Similarly, on the biological portfolio, I expect high double-digit growth in the years to come.
All right, and just one more question on the margin front. Your EBITDA margin was under pressure in the third quarter, despite the improvement that we saw in the gross margins. Now, you mentioned that pricing did decline in Q3. So where is the improvement in gross margins coming from?
So improvement gross margin is always a factor of product mix. As I said, we have seed business, biological business, domestic crop protection business, as well as export business. Because there was a lower export business, which is a low margin business, that has led to overall margin improvement. But we expect that business to remain under challenge because of the global demand supply situation. But we expect to continue to improve our margin on the domestic side.
Sure. Thank you so much. And one last question from my end. For FY26, what could your revenue as well as margin profile look like? If you can just give, if not specific numbers, but at least something qualitatively.
See, our effort in the what you call five-year horizon is going to be that we start growing faster than the industry average. Industry grows about 5 to 7%. Our effort will be to really grow faster than the industry. But more importantly, I'm expecting significant improvement on return on capital with the combination of portfolio adjustment as well as some of the cost-cutting measures we take. So I expect at least 500 basis point margin improvement in next 4 to 5 years.